Hello. Today, we're taking a deep dive into Lyft, a leading ride-hailing company that's made quite a name for itself in the stock market. Competing with giants like Uber, Lyft has managed to carve out a significant market share in the United States and Canada. Despite the impact of the pandemic on the ride-sharing industry, Lyft has shown resilience and adaptability. Let's explore what makes this stock an interesting prospect. Lyft is known for its innovative approach to ride sharing, focusing on aspects like safety, ease of use, and comfort. The company has also branched out into other areas like bike sharing and scooter rentals. Lyft's commitment to transition to 100% electric vehicles by 2030 is another key feature, signaling its dedication to sustainability. Furthermore, its investments in autonomous vehicle technology showcase its forward-thinking strategy. Lyft's stock price has seen some volatility, as with many tech stocks. However, it has shown a steady upward trend since its IPO in 2019, reflecting investor confidence. It's important to consider factors like earnings reports, economic indicators, and market trends when evaluating Lyft's stock price. Regular analysis can help you make informed decisions about buying or selling this stock. Lyft is ideal for investors looking for exposure to the ride-sharing market, which is expected to grow significantly in the coming years. Its strong presence in North America, along with its expansion into other transportation sectors, makes it a promising option. If you believe in the potential of autonomous vehicles and the transition to electric vehicles, Lyft could be a good fit for your portfolio. Lyft has some distinct advantages. Its exclusive focus on the North American market allows it to tailor its services to local needs. Its expansion into other transportation sectors offers additional revenue streams. Lyft's commitment to sustainability and autonomous technology positions it well for future trends. Lastly, its strong brand and customer loyalty add value to the stock. On the flip side, Lyft faces some challenges. It operates in a highly competitive market, with profitability still a concern. Regulatory issues, such as driver classification, could impact its business model. The company is also yet to expand internationally, limiting its growth potential. Lastly, the reliance on technology means it's vulnerable to potential cybersecurity threats. In conclusion, Lyft presents a unique investment opportunity. Its strong presence in the ride-sharing market, commitment to sustainability, and investments in futuristic technologies are compelling. However, it's crucial to consider the competitive landscape, regulatory risks, and profitability challenges. As with any investment, careful research and consideration are key. Lyft's stock may be a valuable addition to a diversified portfolio. Thank you for joining us in this analysis of Lyft's stock. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more insightful stock analyses. Stay tuned for more and happy investing.